Hi, and welcome to today's event where we have the pleasure to present Agillic. To help us through the presentation, we are joined by the company by both Emma Gursoy, CEO, and for the first time, Claus Boysen, CFO. So welcome to, I guess, Emma, you will do the introduction.
Yes, thank you.
The reason for this event, fresh off the press, your half-year result. Already Tuesday, you upgraded your guidance, so that seems strong. Also, accelerating growth is the first that catch my eyes. And with a lot of discussion of economic uncertainty, maybe we could try and bridge this development in the future in this event. So I think that will interest a lot. As always, ask questions down in the box down below. Do it in Danish, do it in English. I will try and translate the Danish question to the best of my ability. But for now, Emma, I think I will hand the call over to you.
Thank you very much, Michael, and thank you very much for everyone who had the time to join us today. We are here to present our Q2 and half-year results. My name is Emre Gursoy. I'm the CEO. I'm together with Claus. Claus is the first time he's joining me. He started with us in the 1st of March, and I'm very happy that now we are both of us attending these sessions, giving a greater perspective to all of you. I just want to start with a very short introduction to our company for those who are new to Agillic. We are a SaaS company, software as a service. We operate within the omnichannel marketing platform. We are a marketing platform operating in the omnichannel marketing automation. As we call it, is the MarTech, marketing technology space that we operate. And what we do is we empower brands by bringing content and data together to activate it within the relevant channels. And these kind of activities naturally has a tremendous impact for businesses who are customer-centric, because these deliveries of timely and relevant messages through the right channels brings higher conversion on businesses. It has a major impact on extended satisfaction, on the customer satisfaction. It's a higher retention for a greater engagement, and it's a longer customer lifetime value, which ends up naturally with a greater revenue. A snapshot of our facts: 64.2 million is the Danish krona is the latest ARR number that we have reported end of half year. We are a 100% SaaS business, which means that we do not deliver any professional services. This is done by our partners. That's why we have a tremendously tight relationship with our partners. Since 2018, we have been listed on the NASDAQ First North Growth Market. If you look at our customer portfolio, we have 108 clients at the end of half year. Of that, we operate with them in 11 different markets where they use our platform over 100 markets across the globe. We are achieving all this through a headquarter office in Copenhagen, and then we have our sales units in Sweden, Norway, Germany, as well as partner sales, indirect partner sales activities in different markets. And we have two development markets. We have in Romania and in Ukraine, two development teams that are supporting our team here in Copenhagen. Altogether, we are 51 people. And we operate in a very large and a fast-growing market. It's the total addressable market. It's growing very fast because it is driven by data growth, which is a fact that we all agree on, that is growing every year, every day. And the second one is the relevance that is required by the customers, requiring from the brands they're engaging with. The relevance is the great need for the communications, which brings the need for the engagements. Now, these engagements are across multiple industries, from retail, finance, travel, hospitality, energy, utility. These are all the kind of clients that we bring in from different industries. And what is the common denominator across all this is that they're all first-party rich companies. They're all in a great interest for customer experience growth, and their customer centricity brings their business development further. And in the bottom, we have mentioned that the subscription businesses, so it's not an industry, but it is a way of working. It's a business model across all kind of industries, what we see on the screen, and many other beyond, who are looking into opportunities to grow their businesses through subscription model. That's where we are tremendously impactful, because at the end of the day, we activate the subscription businesses for greater relevance and a growth. Now, What I will do is that I will just jump into some of the highlights of our half-year results, and then we'll go into the details with Klaus's detailed presentation. Now, if you look at, I'm very pleased to see that we are ending the half year with a very strong performance on our ARR growth. That's a 34% growth. Now, this is the 64 million that I've mentioned. What we see here is that mainly it is driven by our transaction ARR growth over 160%. But in the meantime, we shouldn't forget that it's also driven by 15% growth on our subscription ARR year over year, which is a very strong number together, delivering this 34%. On the revenue side, we have a positive 14% growth year over year. And again, this is a very promising result because it is with this and together with the operational optimization activities that we have been conducting throughout the first half of the year, we have actually improved our Q2 EBITDA result to a break-even of a 0. If you remember, if you look at it in Q1, end of Q1, we have reported an EBITDA for -1.7, and in Q2 we have achieved 0, basically meaning that we are ending the half year with -1.7. Now, all that is the whole idea behind our focus and how we are conducting our business and improving the operational efficiencies is also reflected on our 2 days ago. We have given a new guidance on the 23rd of August. Now, this guidance is also the highlight is, of course, the growth on our revenue, but also driving the EBITDA from a -3 to +3 million previous guidance to 0 to 3 million guidance. Now, that also means that for third year in a row, we will be delivering positive EBITDA. And this is something that we are really focusing on because it is one of our strategic financial objectives to achieve that, as well as delivering a positive cash flow from operations and a growth on our ARR. Now, if you look at our guidance itself, the numbers have increased. But if you just make a little comparison of what does that mean actually versus end year 2021 to the new guidance. So now these are the numbers that are actually quite positive, that we are very happy to see that total revenue, if you compare 2021 end year result with the new guidance that we have gone out with, we are aiming for 13 to 21% increase. EBITDA, I've just mentioned, positive EBITDA, and the total ARR, it's 18 to 33%. Now, these are very positive developments, and we are very happy with the performance that we have delivered so far, and I'm looking forward to stepping into H2 with even a stronger base. Now, let's look into the numbers with a closer eye.
And thank you for the introduction, Emma. I'm pleased to stand here next to you and present the numbers for our half-year report. If we go a little bit deeper into our numbers, the revenue of the first half year was 29.6 million, an increase from Q1 of 1.6 million. And if we look into the future and the financial guidance that Emma just mentioned, we have looked at our deferred revenue, which is the committed future revenue that has increased by 6.4 million since half year 2021, signaling that we will increase our revenue for the second half of 2022. If we go further into the EBITDA level, we have two things that will affect our second half year of 2022, both the operational efficiencies that we have implemented during Q1 and Q2, as well as the increase we see on the revenue side, making us confident that we will expect a positive EBITDA by year end. If we look at the numbers for the total of revenue, first of all, it's an increase to 29.6 from 25.9 last year, and we already see a slight increase in the quarter two from 11.9 to 12.2 million compared to last year quarter two, where we now see the impact of our increased ARR on subscription. Of course, the main driver here is the revenue from transactions. That is driving the increase in our total revenue. If we go further down, we have at the end of Q2 a cash balance of 12.6 million, and that takes me into the next slide, where we in Q2 2022 have a net cash flow positive of 5 million. And if we look at the total half year, we started out with 20.6 million at bank, and the cash flow from operation has increased our balance by 500,000. And then we have invested in our primarily in our software platform, 6.9 million, and then spent 1.6 million for our finances, leaving us with 12.6 million. If we look a bit ahead of half year, we will continue to invest in our software platform in 2022. We have optimized our finance situation by making a down payment of 2 loans, in total 2.5 million DKK, which happened in July after this half-year report, in order to down pay 2 loans that has the highest interest rates that we have and was most expensive, and then combined with reducing the cash requirement for other borrowings in the total of 4.5 million. So providing a net less requirement of 2 million over a period of 15 months. Furthermore, we continue to aim for a positive cash flow from operations for 2022. And of course, we have seasonality fluctuations. And if we look at the past 2 years, the most positive impact is in Q4, where Q3 is less positive for cash flow from operations. This is a highlight of the quarterly development of our total ARR, leaving us with 64.2 million, which combined is 49.6 from subscriptions and 14.6 from ARR from transactions. So an increase on both ARR from subscription as well as transactions is what we have done and completed, both compared to last year and the last quarter. If we go and look at further SaaS highlights, we have increased the number of clients to now 108 and maintain our strong average ARR per customer at a level of 600,000. And if we look at the first half year 2022, where did our customers come from, the wins that we had? We have focused in the past on increasing our internationalization. And if we look at the first half year of 2022, 38% of our wins were coming from international markets, while we in first half year 2021 had an 80% win of our new clients. Those two brings us into what are they providing us in ARR if we look at the internationalization for half year 1, and 32% of our increase in ARR value from subscription is coming from international markets. Then our net retention rate is remaining at above 100, which is very positive, and we have now a customer acquisition cost for the first half year of only 150,000, so continuing our lower cost on acquiring a new customer. And that leaves us to a month to recover at 4 months for the first half year 2022, which is a very, very strong number. At this slide, the main focus is our change in ARR for the first half of 2022, an increase of 16.2 million compared to the increase we saw first half 2021 of only 1.1 million. Mm-hmm. Last, looking a little bit into the financial guidance that we lifted here Tuesday this week to the new range. We now have a guidance on revenue of 60 to 64 million. And the main thing that I want to bring forward here at this presentation is that we have an ARR from transaction at half year at 14.6 million. And we are aiming at a level of 10 to 14. We are increasing the spread on ARR from transactions and do expect that we will have some leverage back towards the first quarter of 2022 and thereby giving us a spread from 10 to 14 on that, giving us a total ARR level of 66 to 74 million.
Now, before I take the word, I just want to say a quick update on what is very important for us is not just the financial guidance, but the last 3 years that, I keep talking about the Reboot to One strategy that we have been working on. It had some strategic financial goals, and the ones that are on the bottom left corner. And these were the double-digit percentage growth on ARR subscriptions, which we're achieving. Positive EBITDA for the year, that's what we are aiming for now, third consecutive year, and the positive cash flow from operations, as we just mentioned, that we have also achieved that one, and we are aiming to achieve that one again this year. Now, these are the elements of our Reboot to One strategy that is taking us from the financial perspective and fueling us for future readiness. Now, when I'm talking about the future readiness, is I also want to make sure that that we give the greater picture on what we are working on for those investing on our business. Now, there are three main areas. Business model and financial performance is an extremely important part, as well as the go-to-market strategy, having cracked the code on how do we actually do that. And then the future readiness, because at no one point we can stop developing our platform or our business growth achievements. So if you take a look at the business model and financial performance, our Reboot One strategy was based on this fueling of our financial performance as giving us the wind that we need to grow our business. So again, it is very important that not just we deliver a positive EBITDA, but we fuel this for further growth, both for international growth as well as the partner-driven growth that we have been established together with the Reboot to One. On the go-to-market strategy, it is very important to mention that our way of expanding our business from the strategy that we have put in place was based on how do we create a scalable and an international go-to-market model where we do not need to invest on boots on the ground every market we step in, because we do not have that agility and the financial power to come from a small market and expanding into the larger one. This is what we have achieved so far with our partner strategy, and the 38% growth that we are talking about in the first half year. The new clients that are coming, 38% of them are coming from international markets, meaning that we have this connected strategy working, showing us the impact. So now we just have to do more of it. And that's why one of the reasons that I want to mention this very specific part of the conversation is it is very important for us to see that our strategy is delivering the results that we have aimed for. Now we adjust it continuously as we have been doing throughout the year. How can we get more out of our strategy by the adjustments moving forward? And if you look at the future readiness, what is extremely important for us is that not only that we're competing on an international level with other international MarTech companies, we have to be best of breed as the promise that we have made to our existing clients as well as our prospects in the future, so that we can actually compete in the ground with a unique proposition that we are coming out with. And I think it is all together. We have talked about it, made in Europe. We are one of the very, very few who can actually claim that they're coming from Europe, living up to the compliance regulative requirements in the European markets, which we are pushing really hard. The last thing that I just want to mention, on the 14th of September, we are coming out to the market. For quite a long time, we have been working together with Forrester. We have completed a European study on personalized omnichannel marketing automation. The study has not been done, as far as we can see, in that spectrum of the detail that we went into. We will be presenting on the 14th of September. Now, why is this important? Because this is also putting us in the map as a thought leader in the European markets with a statistical and a consultancy company perspective of know-how that is defining the future of. I'm not going to give some of the results that we have seen so far. It's very promising. We like that. It is actually driven within our strategy to activate this as we move forward. This is what we have for today. We would love to have the rest of the time for the conversations and the questions that you might have.
Perfect. We both have some questions here, and I also get shipped something on email. I think I would like to start on. You just adjusted your guidance. If you take the mid-range of that guidance, that kind of indicates around 26% growth in the ARR. Someone here is asking, what should we expect going forward? We are seeing some acceleration, 20% last year, 26% this year. You know, I know you cannot be specific or guide already on 23 and 24, but your feelings around those growth levels and the acceleration, is that also something you hope to deliver into 23, 24?
Yeah. So I think that two main focuses that we also have presented here is we have had a strategy since for the past 2 years where we focus on double-digit percentage ARR subscription growth. We focus on positive EBITDA and cash flow from operations. That, alongside with the information that we now have provided in this presentation on our internationalization and how that works, is a part of how we also see the future and invest in continuing a growth rate.
I mean, I would just say absolutely true. And here's a bit of a perspective on that one is we're a growth company. Naturally, it is our greatest aim to grow faster in a greater penetration to the new markets that we are stepping into. And as I said before, when you come from a smaller market like Denmark, trying to penetrate into the larger markets such as Germany, such as England, such as the other larger markets, it always takes time. But what we are seeing is now we have a formula that works, and now we are pushing beyond that one together with our partners. So yes, the answer is yes, we would like to grow, and yes, we will be, once the guidance is completed for the next couple of years, we'll naturally share it with all of you, but the aim is to grow.
And actually, there's a good question also. Can you tell more about your EBITDA guidance over the coming years? Probably not, but the second part of this question, and do you expect to focus most on growth or profitability? You know, looking through your numbers, you are now down to a CAC of around 4 months, very, very low CAC. That tells me your model is working. Why not? You're very focused on growth or profitability, but why are you not giving more investing more to growth if you can have those numbers? Maybe explain a little bit about your thinking about profitability versus growth, especially with a model showing that numbers. And is it some, you might say, you are maybe not able to scale enough up fast enough, or the market out there is not ready? So if you can give some comments about that, Emma and Claus.
Sure. Let me just give you a bit of from the historic perspective. The last couple of years, we have not been operating within normal market conditions. The macroeconomic changes, the market conditions have been extremely different from what we previously known. And thereby, it is very hard to make projections about how things will be going forward because we are in a new era. Now, when we defined our strategy of the strategic financial goals, it was a balanced growth. You know, we will have the growth, but we will have a solid positive EBITDA on the side to create a kind of a healthy business. And that's what we have been doing for the 3 years in a row again this year. We invest every amount of EBITDA, which is thanks to the board of directors. They have accepted this strategy that we don't work for making a lot of EBITDA numbers, but we work for running a positive EBITDA and reinvest it back to technology, reinvest it back to growth sales team members. So this has been our aim for the last couple of years, and this is what we're working on right now. But naturally, at the end of the day, we would very much like to have an EBITDA that is also higher than just a break-even.
So you are saying, if I should listen to you, and I know you're not guiding forward, that you are really aiming for this profitable, but the rest will be invested into the growth. So that is also your thinking about the coming years without making any specific guidance.
Correct.
And then there's, I have a questions also coming in from email, but also here on, you are really growing on the transaction side. There are some questions. How will transaction ARR be hit if you go into a recession? That's one part of the question. And the second part, transactions also show that your customer are using your system more and more. Could you actually upsell on that, or will that also drive some subscription higher revenues that your engagement with your platform is this high? So first part, transactions and the fear of the world going into a recession, and whether it could also drive some upselling or subscription growth.
Yeah, so if we look at the market conditions and Europe's potential recession, yes, it will probably impact our ARR transactions. While we have also increased the spread on ARR on transactions. Will it be significantly? It's difficult to predict, but we don't think so, because there will still be trading happening, and online trading will happen, and there needs to be communication among our customers and their customer. So we will see that the ARR and transaction has a certain level, but it's difficult to say what exactly it is. But even though with the very high uncertainties we have currently on the second half of 2022 in the market, we still expect to have a level of the 10 to 14 million in ARR and transactions.
And I think I just want to mention just one other thing, that yes, the transactions are increasing, but we also have to remember that, you know, last year, same time in the first half, it was a different market condition. Our clients were still struggling in a different world of COVID-driven businesses. So let's say the increases are maybe actually neutralizing, normalizing more towards that. And I'm hoping that as we move into the second half of the year, not only the recession, but I'm actually seeing something, maybe the businesses are picking up even further into the engagement with their customers, because transactions not in our power. That's our clients' engagement with their customers, how much, where, and how do they want to activate that. I'm just glad that we are the catalyst on making sure that they're using it through our platform. And just to answer your question, whether it's an uplift opportunity, sure it is, and we are absolutely using that too.
And then actually we have a question regarding it. Is a little bit of a housekeeping. How much of the ARR growth is coming from existing customers concerning the upselling and churn? You have given us the net retention rates of 102. Are you willing to split it out in churn and how much you're upselling to existing customers?
If I may just answer the churn part, then we can talk more on the retention side. We have spoken this in the past too. We do not submit the churn numbers because we have seen in multiple situations that the churn is not defined in the same way from one company, one SaaS company to another SaaS company. So if we will be giving churn rates, it might be understood indifferently. So therefore we wanted to keep it out, but we want to talk about the net retention rate, because actually that is the part, that is the way that we can say that we are sticking to our clients, they're staying with us, and they're growing with us.
Correct. So I don't think we can elaborate further on the exact numbers, but actually say that the net retention rate is an expression of growth among our customers, existing customers.
Yeah.
And speaking a little bit about the cash flow, we maybe can go to that slide. Cash flow from operation in Q2 was significantly higher in Q1. What is the reason for that is a question here. And maybe elaborate a little bit on maybe your future expectations from both on the cash flow from investment. Is that going to stay the same level in the second year? And are you expecting to increase cash flow from operations from the first half year?
So the fluctuation we had from Q1 to Q2, when we reported on Q1, there was a time issue on where we have agreed with some customer that they could pay in the beginning of after the quarter, which they did before we presented it, but that actually had a negative impact on our cash flow that was more than usual. Wherefore we have also seen a little bit more positive cash flow from operations in Q2. So that's why we have netted them out in this presentation to explain that the total should be seen together, the 2 quarters on cash flow from operations. If we look ahead on cash flow from operations, cash flow in Q3 is normally has been around 0 or something like that, where Q4 is higher. So that's also our expectation for the rest of the year, that we will see a small or around a small impact of cash flow from operations, but a positive in Q4. If we look at the future investments, we will continue to invest in our platform. to be where we are with our customers and gain new customers. And on the cash flow from finances, we will in Q3 see an impact on the repayment of the 2 loans, but over a 15-month period of time, that will actually be a positive development compared to our loan agreements, because we have made some other agreements with our borrowings.
Perfect. And then I got a question from an email. During the summer, you have had joining your board 2 members from big IT giant ServiceNow and Salesforce. Sorry. What are those persons bringing into the board? And then there's a little bit of a cheeky question also. Does this mean that you will maybe make more collaboration with those companies? And in the end, we are seeing a consolidation out there in the IT sector. Funds and big companies are seeing good, attractive buyouts in the smaller companies to put their service in. So there's a question: could that mean you, in the end, also could be sold to one of those?
First of all, I'm very happy to welcome both Thorsten Köhler and Jan Juhl to our board. I'm very happy that we'll have the opportunity to work together with them because they're both coming with high level of experience on internationalization, having a SaaS company, SaaS platform, traveling from one market to another, penetrating into them, both through direct and indirect sales models. So these 2 gentlemen are so welcome from my perspective because they're feeding it directly into our business strategy. That's why I'm going back to the slide where our business model is based on this, our future readiness, being the best of breed product within the space we're operating, expanding this. Our aim is actually naturally having their experience to be exercised within our strategy, within our operations, and within our future readiness. So that part, I'm very happy. The second part of your question, I think that is a question that is the board of directors should take.
We need to try and Claus. The questions out there, yes. And then a final question. You made a lot of investment in the German market. Your expectation for that market, and the second part of this question is: are you seeing the impact? Germany is now being called the sick child of European economy because of the energy crisis. Do you still see growth down there? Are you the size and that you're entering this market? Does that still give you opportunities in a market that might be a little bit hit in the economy, if the economy gets hit by a lot of companies?
Let me just share my perspective, and then you're welcome to chip in now, Claus. I think it's very important to mention that, first of all, a lot of investments is actually in our terms. We have 2 direct sales team members in the German market right now, and they're focusing on direct conversations with our prospects. On the other side, we have Blue Planet, our reseller, who have been in the market, and we are growing together with them. It is our greatest desire to penetrate into the market. Now, yes, I always call it, Germany sneezes, we catch cold over here, because their impact is across Europe, and for Denmark and for the rest of Norway is quite big. But on the other hand, let's look at the German market and where they are. Yes, there is the energy crisis, and we cannot talk about how important it is and all that. We know that. But can anyone afford not to improve the status quo in the European digitalization journey? No one actually can afford that. So yes, we might have a lot of economic uncertainties ahead of us, but if you look at digitalization, the growth of the markets and the infrastructures and the future of the markets, I think there's a direct relationship between, if you want to be strong as you are now within the European market for Germany, they will continue to invest in. So that means that for me, is I see this one is another opportunity to engage into the market together with our direct and indirect team members.
Yeah, no, I agree.
Yeah, but if you both agree, then it must be the truth. No,
That's right.
I think we have gone through all the questions coming in on emails, coming in on the chat over here. Thank you very much to you, Emma and Klaus, for taking us through the presentation.
Thank you very much for your time. Thank you for joining us. Thank you.
Thank you. Have a nice day.
You too.
You too.